Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market Site is Mark Marex, Senior Director of Index Research and Development with Nasdaq Global Indexes, and Ryan McCormack, Factor and Core Equity Strategist at Invesco. We're here to discuss 2025 earnings growth projections for the Nasdaq-100 and how to get exposure to the themes. It is great to see the both of you, as always. Welcome back to Trade Talks. Mark, you know, the Nasdaq-100 back half of 2022, it really has not looked back.
Yeah. I mean, we're approaching, I think, 30% in terms of performance year to date, 27, 28, depending on the day. It's been a pretty consistent story, you know, fundamentally driven. AI has been a big driver of that, obviously, but seeing some really good fundamentals across the index. I mean, it's been a lot of the names in the Mag 7 doing the heavy lifting, but it's been pretty broad-based as well. There are names outside of that select grouping, right? Names like Netflix, AMD, even Costco getting in on the action this year and having really solid performance. So it's an encouraging way, I think, to wrap up the year, right? Looking at 20% earnings growth in the rearview mirror for this year, looking at potentially 20% again next year for the index as a whole, really driving the broader U.S. equity markets higher in terms of that earnings growth. Yeah,
it certainly has. And Ryan, the question that keeps coming up is how much longer can this momentum be sustained? Yeah. And, you know, over the past couple of years, it doesn't, you know, the fundamentals, to Mark's point, are keeping up with the valuations and with the momentum and trends that we're seeing within the index.
Yeah, I mean, the story is one that's fundamentally driven. You know, I think when you look at valuations, sometimes we're, you know, depending on the time of year for kind of the past 3 years, sometimes they can look a little bit elevated, but, you know, we've seen that fundamental growth where that picture is starting to catch up to valuations, and, you know, we could see kind of a trend of valuations coming down. And, you know, of course, as we head into January, like, we kick off the year on a very exciting note with release of Q4 earnings, which, you know, for a lot of these companies is by and large the kind of the most important or the largest quarter that we'll see. So, you know, we get a pretty good check-in, right, to start the year, you know, given how strong we've ended 2024, if we see that fundamental growth continuing.
Yeah, and Mark, there's a new addition to the index as of November. Tell us about the company, the sector it represents, how it was added, why.
Yeah, so a couple weeks ago, mid-November, AppLovin joined the Nasdaq-100, kind of an early addition. Skipped ahead of the typical December reconstitution schedule because we do have rules in place in the index and the methodology to kind of prevent companies that get too small from sticking around for too long. So in this case, it was Walgreens. Unfortunately for them, they got kicked out in November, and then AppLovin was waiting in line pretty much for several months as the top constituent in the Nasdaq Next Generation 100. Which is the next 100 largest companies outside of the Nasdaq 100 that list on Nasdaq. Really exciting company in the tech space, software development specifically. At one point, I think they were up over 300% year to date, the best performing tech stock in any part of the industry in the US, even globally this year. So just a continuation of the types of companies that we've seen for the most part year after year for a couple decades now, joining the index, true sort of disruptors in the tech space, whether in this case it's software, whether in the case of, you know, names like NVIDIA, it's more so on the hardware side. Just continuing that streak of showing Nasdaq is the destination for the most innovative companies globally.
Yeah, and Ryan, that's something that we focus on quite frequently, the amount of money that's being invested into R&D, their cash positions and so forth. You know, sometimes companies can get beat up if they increase their R&D budgets and so forth, but it's almost understood that when you see them increasing R&D budgets, that there's something behind the scenes that's going on, and the fundamentals will catch up. That's what I think is so exciting about this index when you guys show the charts of R&D investment and how that has played out and translated into earnings growth.
Well, 100%, right? I mean, I think at face value, you know, if companies are spending money, I mean, that, you know, it kind of causes pause from an investor standpoint. But if you look at sort of the pedigree that these companies within the Nasdaq-100 have sort of grown into, I mean, this R&D is really viewed as a net positive. Right, we look at the patent data, we look at the R&D data, and we think that sets them up for kind of finding future earnings growth, right? They're investing now for or tapping into that potential fundamental growth 3, 5, 10 years down the line.
Yeah.
And I think it's going to be exciting because Friday we're going to get a whole new batch of companies announced joining the Nasdaq 100 in the annual reconstitution. So it'll be interesting to see which companies make the jump, and that's always kind of a big event.
Well, another common question that we're hearing as well, obviously we got the election over with, so that piece of uncertainty has been removed. Do you think companies will have a challenge when they are providing guidance when we get, fourth quarter earnings? That'll be in the first quarter, so you're going to get those updates. Look for that guidance, because there are some variables out there. Or is it largely just noise? And if you're operating well through what was considered a challenging environment, let's call it the past 3-4 years, keep on course?
Yeah, I think in the short term, right, like right around that earnings announcement, it's shown that investors are really paying attention to guidance, and in many cases, some of these stocks are so-called price for perfection, or the numbers are just so astronomical, the whisper numbers that the street is looking for, that you can see some of that short-term volatility. I mean, a quarter like Nvidia's in the last round, I mean, by all means, a blowout quarter.
Right.
Guidance was a little bit light, I think, from the eyes of the street, and we saw some of that volatility in the aftermarket. But ultimately, I mean, we look at this as a longer-term investment for investors to get access to large cap growth. And through that lens, I mean, from the longer term, it does sort of become more noise when you focus on the longer fundamental picture.
Mark, that's typical, though, when you think about when guidance is delivered in the first quarter. I mean, obviously your outlook's going to be more challenging to figure out in 12 months versus when you get later in the year and you have more clarity. So there's a little bit of seasonality involved with that as well.
Yeah. I mean, look, it's interesting. Some of these companies, they do play a little bit of a game with investors and with analysts in terms of trying to be a little bit more conservative in their guidance, just to have better odds to beat when they actually do report numbers later in the year. We saw a little bit of that this past quarter. I think Microsoft's guidance was a little bit disappointing to some, Apple's as well. But I mean, the underlying story with the broader NDX, but especially a lot of these Mag 7 companies, is that they are in charge of the single largest secular growth theme on the planet right now, and that is still AI, right? And NVIDIA has reaped a lot of those benefits first because they have the shiny object that everyone needs to train all the models today. But even that is sort of starting to be talked about as being in flux in terms of how much more resources are companies going to spend next year and beyond on sort of initial training compute with NVIDIA's GPUs versus sort of ongoing edge compute to do inference for AI. And Apple's really well positioned in that ecosystem in terms of sort of transforming the iPhone into a destination for edge computing. And you've got the likes of Amazon, which just recently came out with the new Trainium chip to do a lot of those heavy load processes. Google with its TPUs. Like, a lot of these Mag 7 names are doing their own thing within the chip space to make sure they're properly positioned and not beholden to NVIDIA for years if they're the only game in town for GPUs. And it's going to be interesting to see how this evolves. But the point is even if NVIDIA is not winning every single year, you still got 6, 7 other massive companies in the index that are really well positioned to continue riding this wave.
Well, I mean, it's great for the marketplace too, and us as consumers. More competition offers more innovation. So I'd almost be disappointed if we only had one choice. So it's going to be interesting to see how this plays out and the different types of products that are going to be developed. Ryan, from an investing perspective, how does one get exposure to these types of themes?
Well, I mean, I think probably the easiest is just looking at straight Nasdaq 100 exposure, right? Of which Invesco offers QQQ, which many investors know it's the 5th largest ETF out there, along with QQQM, which is in your kind of open-ended ETF format, a little bit lower on the expense ratio standpoint. We launched it 4 years ago for the more buy and hold investor, but we've seen assets grow pretty considerably, and we have people across the street, whether it be institutions, retail investors, financial advisors, using it. From there, we actually launched 2 strategies last week that expand the Nasdaq 100 family, right? I mean, it's such an interesting index, and you can get long-only exposure, but you can also kind of like get a little bit more detail-oriented, more defined outcomes, so to speak. So we launched Q Big, which is our QQQ top ETF. It's based on the Nasdaq 100 Mega Index, and it looks to gain exposure to the top roughly 45% of the index. And I think what Mark said at the end is sort of a perfect segue for this QBIG, is we've seen changes in leadership over time, right? You pick your acronym, whether it's FANG, FANMAG, now you got the Magnificent Seven. You know, chances are there's going to be some new shiny acronym that's coming out in years to come. So it sort of actively takes that movement within the index, some of the new leaders, some of the laggards in real time. So it truly gives you that exposure to the upper end of the index, kind of the truly mega caps, in kind of identifying that top 45% weight.
Yeah.
And then the second is QQLV, which is based on the Nasdaq-100 low volatility index, and basically a different look and feel, right? But for those that may be looking for a little bit more downside protection, like looking to segment out some of those lower volatility names, it'll hold a basket of about 25 stocks that represent the lowest volatility from the previous 1 year. So looking to maybe dial down the risk gives you two different flavors to
Which
get
is
Nasdaq
so
100
interesting when you think about low vol and QQQ in the same token, because really that was part of the story of this year as well, was concentration risk within the index. So to be able to develop these products and still get exposure to it, but with more nuanced management, is really interesting.
Yeah, and I think a lot of it is it's not necessarily competitors, right? I mean, they're designed to be very complementary.
Right.
So with that, I think like it breeds a whole new set of options when you're looking at Nasdaq 100 and how you can get very targeted with that exposure.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.